Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is time for a gold price update. We are looking at gold that has come back to around $3,200. It was a recovery on Friday. However, gold's been down for the last couple of weeks. I want to show you the big picture analysis in the first part of this video. In the second part of this video, I'm going to share with you for free some of the premium research that just went out to our paid subscribers. That is going to be shared with you for free. It is on a gold mining company that we are investing in here. The name of that company is Bravada Gold Corp. This is a company that has a past producing gold mine in Nevada, United States. The Wind Mountain project is in Nevada. It is trading for pennies on the dollar. You will see what I mean. And they are publishing a pre-feasibility study within the next year. And typically a pre-feasibility study will be the last thing before a company tries to market itself for a buyout by a larger company. So that is what is coming for Bravada. I'm going to talk about that in the second part of this video. If you would like to join us in achieving even greater upside than you can by buying the shares in the open market, we have an opening with Bravada for a private placement where you get free warrants. Free warrants in addition to your shares. The deadline to register for that in our service called Elite Private Placements is this Wednesday, May 21st. Remember, you can buy shares on the open market, whether you're in Canada or international, you're buying on the exchange, the ticker is BVA, or if you're in the United States, you can buy the ticker BGAVF. That'll get you exposure to this company that we are investing in. But you can get even more upside if you buy with us in the private placement. And before we go any further, I just want to remind you, I am not taking any fees or kickbacks from Bravada Gold or any company that I ever talk about here. They are not paying me a single cent to publish this video. That is not my business model. You have to be very careful where you're getting your information from in this world with respect to gold and the mining companies, because there's a lot of paid promotion out there. My business model is to publish research for people that find value in it. I hope you'll join us either in investing in Bravada or joining our premium service to invest with us in the private placement. But one way or another, I hope you'll find value in the research that you're going to see here for free. That's my guarantee to you. Now let's start by looking at where we are with the gold market. Here's our legal disclaimer. Now, gold was a little weak at the end of the trading week last week. It'll be interesting to see what happens here as we get into Monday. You know, Moody's has just downgraded U.S. debt. That'll be interesting to see how that reverberates through the market. But I do want to remind you on the big picture for gold, which is that gold has broken every single resistance level that we can possibly look at on the charts. There is no more resistance when we're talking about gold itself. There's no more resistance on the chart. And so when we look at where the expected support is going to come in here at $3,040, it's this rising trend out of the 2022 peaks, rising, broken right there, the last red shaded zone, broken higher. It's acted as support already once. We expect this area to act as support again. That's 3,040 to be precise in the spot market. So you take a market that has no visible resistance on the chart. We call that blue sky territory. It's literally the market's looking up at the sky and saying, how high do I want to go? There's no human being on planet Earth that knows how high gold might go now. We have support at 3,040. We have what my expectation is for the next set of targets around 3,800 to 4,000. These are some Fibonacci extension levels that I've drawn in on our longer term charts. I'll cover that another day here. For now, know that our next set of targets is 3,800 to 4,000. As long as the support holds. This is my expectation for gold. Support at 3,040 holds. And we look at the next set of targets here within the next 12 to 18 months. So remember that gold above ground, gold that you can hold in your hand, is trading above $3,000 per ounce in blue sky territory. Now we want to talk about how you can buy gold in the ground, not for $3,000, but for $6 per ounce. And that's by these already demonstrated gold deposits, such as with Bravada Gold, where they already have measured and indicated gold in the ground, but the market is discounting that to such an extreme level that it's almost being given away for free. So I want to share with you what we are talking about here for Bravada Gold. Let's talk about some of the specifics for this company. As I said, it's a Canadian domiciled company. All the assets are in Nevada, United States. The market cap of this company is a tiny $3 million US. And when you do the math with me about what their existing assets are for selling for $3 million right now, you're going to see why this is such a compelling valuation. So let's talk about the assets. We have a measured and indicated resource of a little less than 500,000 ounces of gold, 474,000 as of the latest study. You've got an additional inferred resource of 22,000, and then you've got a little over 12 million ounces of silver. So when you add everything together here, you're looking at over 500,000 ounces of gold equivalent. There's actually more in the entire deposit. There's actually more than 1 million ounces in the entire deposit. It's just that for the last preliminary economic assessment that they did, this PEA study back in 2022, they only considered the higher grade core of the deposit, but you're going to see when we look at the map that the actual deposit is larger than that. This is what they're including for the current economics. We look at the cash costs over here, the local cash costs on the mining level, just over $1,000 per ounce, and the all-in sustaining costs just under $1,200 an ounce. So wait until you see in a moment when we talk about the economics of this deposit. With gold above 3,000 and the extraction costs here still at 1,200 plus or minus, it's just incredible the amount of cash flow that this deposit is going to be producing. So what I want to do is actually just jump right into that right now, because I mean this is the meat of the discussion here. It's how attractive the valuation is for what they should be producing here when this mine is put back into production. Remember, this is a past producing mine. They mined 300,000 ounces of gold back in the 80s and 90s under the previous ownership, and they shut it down in the late 90s. Why? Because gold prices had been falling for 20 years. Gold prices were 1/10 of what they are today, about $300 per ounce, so they shut it down. But so this is a mine that they have the ability to produce. They already know that they can produce gold from this deposit. This is not an exploration company. That's the hard thing to fathom. Even with such a tiny market cap, this is a demonstrated resource already in the ground that has successfully produced gold in the past. So let's look at the current numbers here compared to our own estimate, 2025. And then remember, they'll be publishing a pre-feasibility study, which will basically take all these numbers about a year from now and make them even more defined, even higher confidence to put this mine back into production. So back in 2022, we were estimating 482,000 ounces of gold equivalent production over the life of the mine. I'm going to keep that the same for our estimate. What changes majorly is the gold price assumption from $1,750 up to $3,000 per ounce. This is obviously still $200 below where we are today, but let's here for a moment assume that gold can kind of consolidate above the 3,000 level. Let's just assume it's not ready to go to 4,000, 5,000, 10,000, but it's also not going to collapse. Let's imagine this sort of consolidation around the 3,000 level. So gold price has increased dramatically. The all-in sustaining costs, as I said a moment ago, back in 2022, were estimated to be $1,175 per ounce. I'm going to upward revise this for the sake of our estimates here. I'm going to say that the all-in sustaining costs have increased over the last 3 years. Inflation has been high. Cost of labor has gone up. Inflation has gone up across the board for equipment, for, drilling contractors, et cetera, et cetera. So let's estimate that the all-in sustaining costs have increased to $1,500 per ounce. That means the margin for every ounce of gold produced from Bravvada, from this flagship deposit, Wind Mountain, has gone from 575. It's the gold price minus the all-in sustaining cost, getting the margin. It's gone from 575 up to 1,500 per ounce. Do you see this? I mean, because of this dramatic increase in the price of gold, this is what happens to the economics of these, these former mines that were, let's say, yes, they were producing some sort of a profit, but more like a small deposit per ounce, a small profit per ounce. This deposit is now producing an estimated 1,500 per ounce in margin from the mining operations. When we multiply out the margin by the life of mine expected production, that gets a 277 million cash flow from mining operations back in the 2022 estimate. Now we update that to 723 million. Do you see what happens when this margin increases? The production stays the same, but the margin increases. We're talking about nearly a tripling in the cash flow from this mine. If we take the 2022 figure, what it was going to cost to get this mine into production, they were estimating it at 47 million back in 2022. For our estimate, let's call it 75 million. Again, let's say that inflation has run hot, labor costs are higher, equipment costs are higher, et cetera, et cetera. You subtract the startup cost, the capex, from the cash flow expected from the mining operations. Back in 2022, they were estimating a total free cash flow, according to our figures, of 230 million. That is now up to 648 million. Again, so it's nearly a tripling in the expectation of the total free cash flow. You compare the estimate for the total free cash flow to what the market cap was back in 2022. The market was valuing this future expected cash flow at $5 million. In other words, 2.2% of the free cash flow. Look at what it is now. We're actually talking about total free cash flow that has nearly tripled from what it was back in 2022. Yet the market cap, even on a nominal basis of this company, is smaller than it was back in 2022. It's now $3 million for $648 million of cash flow versus $5 for $230. And so therefore, the percentage, this company is now selling for 0.4% of the free cash flow expected in the future based on our current assumptions here. So you can see, I mean, this is just, it's such a, I mean, this company was dramatically undervalued in 2022. It's now selling for a fraction of the level that it was selling in 2022 because we have the gold price that is so much higher. So this is a look at our updated estimate on the economics of Wind Mountain, Bravvada's flagship mine. Again, these numbers will be updated once again when we fast forward about a year and they do the pre-feasibility study. Okay, so let's look at the projects itself for Nevada. We were just talking about the flagship project. That's right here, the Wind Mountain project that's 100% owned by Bravvada. They've got 9 other projects here in the state of Nevada, most of which are early exploration stage. They've had limited drilling or only, surface level grab samples or some geological studies. The exception to that is this other project here, the Baxter project, which is more of an advanced exploration. And this, funny enough, this project actually was signed back in 2023, just 2 years ago, to an 85% earn-in by a much larger company, Endeavor Silver. So Endeavor Silver agreed to spend $4.5 million evaluating this Baxter project over the course of 5 years. $4.5 million is greater than Bravada's entire market cap for all of the projects combined right now, including the flagship Wind Mountain. So Endeavor has said that we're going to invest more than your entire market cap into one of the early stage exploration projects. So basically the market is discounting the entire $4.5 million that Endeavor is going to invest into this project and saying, like, we're going to treat that as zero, right? Because the market cap of the entire company is less than this alone. In addition to Endeavor investing $4.5 million into the Baxter project, they are also going to be paying $100,000 annually to Bravvada for 5 years, and Bravvada will retain a 15% interest in the Baxter project for anything that gets produced in the future. So, I mean, this is a nice little agreement here, for Bravvada. But that's just to let you know, we have that going on. Also, we have these other early stage projects, but it's really Wind Mountain, right? Wind Mountain is the flagship project. Let's continue looking at some of the fundamentals for the primary Wind Mountain. This is the open pit. I said this is a past producing mine. You can see the walls here of the open pit in Nevada. So this is a look at the actual mine. I just think it's so critical to remember this. This is not an exploration company. This is a company that has a defined gold resource in the ground. It's just valued at pennies on the dollar. Let's look at the model. Now, this is the 3D model where we can see in red here the higher grade gold. This is the design for the first phase of the mining operation in red, and then they would be expanding this into the blue in subsequent years. They also have other mineralization here that's been found both in the green areas here, you can see over here in green, and then in the yellow dashed areas, there is additional mineralization right here also as well to the south. And then if we get over here to the west, so there is the opportunity to be expanding this deposit. I mentioned in our resource calculations, we're assuming less than 500,000 ounces ever gets produced. But if you go back to the resource estimations that were done before they said, let's just consider this higher grade zone in red, they had actually estimated the entire deposit at over 1 million ounces. And so, the reason why they chose to narrow it down to the higher grade is because several years ago we were talking about gold at 1,700 per ounce. At 3,000 or higher, a lot of this lower grade stuff becomes more economic. So let's just remember that as far as the potential for expansion goes. Going back to look at the photograph here and then talk about some of these fundamentals, I did say 300,000 ounces were produced in the 80s and 90s by the previous owner, past producing mine. There's the figure for the known gold equivalent gold resource, even though we're using less than 500,000 for our cash flow estimates. The startup capex, I said a tiny $48 million would be paid back. All the startup costs would be paid back in less than 1 year at current gold prices. This is incredible. I mean, some mines out there, they don't pay back for 5 years or 7 years. The economics of this are just so incredible at today's gold prices. The key development, I've been hinting at this, is that the current private placement, which is open, is going to fund a pre-feasibility study. This is going to take 12 to 18 months to complete. They're going to do additional drilling a lot of geological studies. This is done by an independent company. And this pre-feasibility study is typically, for a company that is going to get bought out eventually, this is typically the last step that a company would need to complete in order to really get the larger companies circling prior to a buyout. So this is a very important step which is happening right now for Bravvada. It's going to get to the point of demonstrating proven and probable reserves for the Wind Mountain deposit. That's the highest level of confidence that you can have in economic gold to produce. And once again, that's typically the level at which you would start have larger companies circling and becoming interested. Here is the news highlighting the market conditions. I really like this. This came out about a month and a half ago. They're also highlighting the executive order here that the Trump administration made as far as emphasizing production of critical minerals in the United States. And Trump also included gold as one of those critical minerals. So Bravvada is seizing upon the opportunity to initiate this pre-feasibility study on Wind Mountain. Last but not least, we have to talk about how, the market sentiment on gold mining companies moves in waves. Bravvada previously traded 200% to over 1,000% higher, with gold itself below where it is today. With gold below, the company traded this much higher. And so whether we're looking at the resource, whether we're looking at what's coming, whether we're looking at the chart itself, which is what I want to get into in just a moment, this is an extremely undervalued company given the current gold price above $3,000 per ounce. We talked about the current market cap here. We talked about the resource. Remember, there's that larger 1.2 million ounces when we include the entire known ore body. I want to highlight that if you are going to join us in the private placement for Bravvada, which is going to fund the pre-feasibility study, then in addition to the shares at 3 cents on the Canadian side, you are also going to receive a full free warrant. For every share that you buy in the private placement, you're going to receive a full warrant, which is exercisable at 5 cents per share at any point within the next 3 years. And so if you think that gold may be entering this mania phase over the course of the coming years, that Dow to gold ratio solidifies its breakdown. Gold becomes the premier asset class in the world. You have all the investors who were once flocking to Bitcoin and cryptocurrencies start to look toward gold miners for a leveraged play on gold itself. You're talking about a company that could have almost $650 million in free cash flow over the life of the mine, currently trading for $3 million. And then you say, well, anything above 5 cents, I get to double my exposure. I have the option of doubling my exposure. Remember, the warrants are not an obligation. You don't have to invest anything further. But if this goes above 5 cents, you have that optionality. You have the choice of investing further only if the company goes higher. If the company doesn't go higher, there's no additional risk that you've taken. So just know that that is your optionality with the free warrants that are given to you, but only in the private placement that we have negotiated for our elite members. If I want to talk about the one negative for Bravvada right now, it's that the liquidity is currently low. If I multiply the share price out by the average trading volume, we get a current figure of about $2,400. So what this means is that if you take a $10,000 or a $20,000 or a $50,000 or a $100,000 position in Bravvada, it's going to take you multiple days to sell that position. The liquidity is currently still low. Now, this is not an investment, in other words, that you want to buy with the expectation of selling a few months from now. This is an investment that requires there to be more interest coming into the gold mining sector in the future. I mean, in the future, if we enter a stage where interest gets back to where it was, let's say in 2016 or in 2020, at some of those last peaks, Bravada was trading, 10 to 20 times this amount of liquidity back then at the previous peak. So that's what this investment is for. I want to mention that the other possibility for this is a buyout. In a buyout situation, after they publish this pre-feasibility study, if a larger company comes around and says, hey, that's it, it's this is a company, let's imagine gold goes even higher than it is today. So you're looking at free cash flow of, above $700 million selling for 3 or 5 million market cap. Let's say a larger company scoops that up and says, we'll just put this mine back into production for that free cash flow. That's where the liquidity rating is not going to matter, because if they come in and buy it out at a premium, you're going to receive the premium, you're going to receive the cash from the buyout, okay? But so this is the one negative right now. You just want to remember, right now, the liquidity is still low on a company like this. And the investment thesis requires either a buyout or it requires more interest coming back into the sector, as we saw at previous peaks. As strange as it might sound for a company with a 3 million market cap, I want to highlight that I actually have rated this as a medium level of risk and reward. On a scale from 1 to 5, 5 being the highest amount of risk and therefore the highest amount of reward, we would put a level 5 as an exploration company, a company that doesn't have a defined gold deposit in the ground. They're still exploring for it. And so if they make a new exploration, it's great. But if they don't, the company kind of falters. This is not an exploration company. This is a medium level risk and reward because it's a defined resource. They've already got the 500,000 or the 1 million ounce deposit, depending on how we want to define it. They're going into pre-feasibility stage. That's a more advanced stage on a deposit. For a company that's making a new discovery, they might not publish a pre-feasibility report for 5 or 10 years after that point. So I am listing this as a medium as far as risk and reward goes because it's already that defined resource in the ground. If you do want to join us once again for the private placement, remember the deadline for your subscription forms and to get registered for our elite private placement program is this Wednesday, May 21st. The deadline for the wire transfers is this Friday, May 23rd. Let's bring up the chart here. I'm going to bring it up first in isolation. I want to just look at where this company is trading, and then we'll look at the upside potential both in the open market and for the private placement. I mean, this company is in a level of strong support that's been going back for 10 years. You can see that back here in 2015, it bottomed in this level between 2.5 and 5 cents per share. It then moved up to 40 cents per share in the peak of 2016. Bottomed again in this level 2018, 2019, early 2020. Moved up to 25 cents per share after bottoming. Here we are again. It's been basing in this level now for 3 years. I mean, we did see a little bit of a spike here in 2023, some lesser spikes in 24 and 25, but the market sentiment as far as these development stage, smaller gold projects has remained very muted in this current cycle in comparison to 2016 and 2020, where all of a sudden interest flooded back into this sector. This has been a real anomaly because we've had gold just marching higher month after month, but for some reason the average person has not become interested yet in these development stage gold mining companies. So this is a company that is basing here still in the current range. It does require that interest to come back into the sector in order for there to be more liquidity. We can see like a 10-year downtrend here that's coming from the 2016 peak, still coming down. We could see a shorter term downtrend. These are meeting. If we look basically into 2016, these are meeting. I mean, it wouldn't surprise me to see both of these downward trends broken in 2026 when we're talking about the publishing of that pre-feasibility study. That could be the trigger that causes both of these levels to break. We'll have initial resistance between 7 and 9 cents per share. secondary resistance here between 20 and 25 cents per share, representing the peaks from 2019 and 2020. Of course, we have the peaks from 2016 all the way back up here at 40 cents per share. So what I want to do now is bring up the exact same chart, and we'll just compare buying these shares in the open market with buying these shares in the private placement. If we want to look at reasonable target levels for Bravada from the current level at 3 cents a share, it's very realistic that the company could just get back to the peak here from 2023. That would represent a 200% gain in the value of Bravada shares from 3 to 9 cents per share. That's very realistic here in a successful scenario. 200% gain would be the share price gain in the open market. If you buy with us in the private placement, and therefore you get the free additional upside from the warrants, you will turn that 200% gain into a 280% gain. Okay, so there's the additional upside that comes to you from the warrants that you don't get in the open market. If we look at coming all the way back, if we can imagine that this stock does something really dramatic like it did in 2016, and it goes from 3 cents up to 40 cents, in the open market, that would be a 1,233% gain from the current level. That's just the math from 3 cents up to 40 cents. If you had the warrants as well from the private placement that we have open, that 1,200% gain turns into 1,900%. That's the math of having the free warrants. So this is the possibility, both in the open market and in the private placement. Remember, if you want to join us in the private placement, the deadline to register for that is this Wednesday. Okay, so that is the update on Bravada Gold and the gold market itself in blue sky territory. If you would like to join us in the private placement, the service for you is called Elite's Private Placements. This is the service where we have negotiated openings for our members in this private placement where you can get the free warrants. And remember, we looked at the difference between buying the shares in the open market, which I think will do very well over the coming years, compared to the additional leverage that you get from the free warrants if you join us in the private placement. Remember, the deadline is this Wednesday, May 21st, if you would like to join us. If you would like to follow along with the other premium research updates that we have released for our members, the service for you is called Precious Metals Intelligence Plus. You're going to receive updates just like this, like what you've seen on Bravada Gold, but covering all of the additional companies that we are investing in. We invest in a total of 10 different companies at any one time, so you're only seeing one of those right here. We also include all the weekly updates on gold, silver, the rest of the mining sector, as well as the stock market, Bitcoin, and the rest of the commodity complex. That service for you is called Precious Metals Intelligence Plus. If you would like to sit down with myself, Christopher Aaron, and discuss your situation in the gold market, you can have a researched and independent perspective. Remember, I do not take any fees or kickbacks from any of these companies, so I am just as happy to offer you suggestions and guidance based on my researched perspective that perhaps you need to invest in a different kind of way for yourself, being in your own unique situation. So you can reach me and book a time slot on the consultations tab. Whether you choose to work with me individually, join us for our premium members-only videos, or invest with us in the gold Bravada private placement, I hope you will join us one way or another. Thank you.